It's been a rough start for the U.S. stock market thus far in 2022. Yesterday, Christopher Aaron pointed out on Twitter a significant trend violation that appears to be underway for the S&P 500, which has been one of the worst performers in the first 3 weeks of this new year in terms of asset classes and/or commodities. On a longer-term timeline, one only needs to look back at the highly inflationary eras following World War II and during the 1970s commodity boom to see where the S&P 500 gold ratio may be headed in this decade unfolding. Currently, this ratio in the S&P 500 and gold has fallen to about 2.4, but on a longer-term time horizon, it would not surprise us to one day again see an era where the ratio falls below 0.5. In other words, a situation where gold outperforms the S&P 500 by nearly 5 multiples or more in real value terms from today. Speaking of high inflationary regimes, in this week's SD Bullion market update, we're going to take a look and a world tour of just how much fiat currency creation expansionism has occurred over the last less than 4 years of time. We're going to look at fiat currency expansion data covering the world's largest economies within the G8, Switzerland, and China. And we're going to use some of that current currency-based data to surmise where the nominal gold price may end up conservatively running to in the years to come, as this current fiat financialized bubble era eventually runs out of runway and delusional confidence turns into potential panic selling and a secular bear market in real value terms. But first, an update on something I have promised all of you viewers out there.
Hello?
Hi, is Paul there?
I'm speaking.
Hi, Paul. This is Dr. Tyler Wall, CEO of SD Bullion. How are you doing today?
I'm doing great.
Hey, just to let you know, this call is being recorded.
Okay.
Do you have any idea why I'm calling you today?
Raise your hand if you like free stuff. We were going to give away a free tube of the brand new 2022 Silver Eagle coins. Then we said, nah, make it 25 tubes. SD Bullion is at it again with the Silver Eagle Monster Box sweepstakes. How many coins are in a Monster Box? Let's just say one lucky participant is going to be showing off their best celebratory dance moves with 500 shiny new Silver Bird friends. So head over to sdbullion.com/sweepstakes for your chance to win.
Do you have any idea why I'm calling you today?
No, I don't.
Well, I'm calling you to let you know that you won the SD Bullion giveaway of a Monster Box of Type 2 2021 Silver Eagles.
Oh, wow.
Do you remember signing up for the giveaway?
Yes, I do. Yes.
We're going to be following up here shortly with one of our members of our team. We'll be contacting you and getting your Monster Box shipped out to you. But just wanted to call you myself and let you know you won. And we appreciate your business with SD Bullion.
Well, I appreciate you. I am truly like SD Bullion. Good quality and good prices and quick delivery too.
Well, we appreciate that feedback. Thank you, Paul. We'll be following up with you shortly.
Well, thank you so much.
Yep,
this really made my day.
Visit www.sdbullion.com/sweepstakes for your chance to win this year's 500-ounce American Silver Eagle Type 2 coin Monster Box giveaway. Details on this year's contest can be found again at sdbullion.com/sweepstakes. Hello out there. On behalf of sdbullion.com, this is James Anderson with your SD Bullion market update. Before we go any further, if you like this kind of content, be sure to smash the like button so we can get this algorithm to serve like-minded bullion bulls. As well, subscribe to our channel if you've not done so already. Another week of upside price climbing for silver and gold spot prices. The gold spot price closed this week just over $18.30 an ounce, while the silver spot price finished just over $24 per troy ounce. We also saw the gold-silver ratio tighten substantially from beginning near 80 to now 75. Here's a longer-term look at this 21st century secular bullion bull market where gold has been consolidating for the last year and a half of time. Technically, it appears poised to make a move beyond the cup and handle formation it has been forming over the last decade, eventually to new nominal price highs, perhaps this year maybe. Again, shortly we'll look at fiat currency creation data that speaks to that point, for me being inevitable. Here's the same over 20-year chart for the silver spot price in fiat USD. And finally, have a look at the gold-silver ratio chart beginning back in the late 1990s when Warren Buffett's Berkshire Hathaway went mega long silver bullion, driving the then gold-silver ratio back down into the high 30s for a brief time frame. Note as well the show of strength for silver over gold of late on this chart, and technically it appears to me that there's a lot of room to possibly fall for this gold-silver ratio. Let's see if silver's relative strength continues in the weeks and months to come. Turning now to major central banks who have been increasingly buying gold reserves to the tune of over 5,500 metric tons since the 2008 global financial crisis, illustrated to them point blank that the structural underpinnings of our fiat financialization era are not all that sound. Perhaps no central bank has put the motive or drive for why central banks own gold bullion reserves better than the Dutch National Bank did in 2019, stating, quote, "Stocks, bonds, and other securities, there's risk in everything. If the whole system collapses, the gold stock provides collateral to start over. Gold gives confidence in the strength of central banks' balance sheets." Well, judging by how much central bank balance sheet expansionism has gone on since the pandemic kicked off in early 2020, central banks are going to likely need much higher gold prices to restore confidence in the strength of their ballooning balance sheets and high inflationary, negative, real yield bond market regimes. This week, Brent Johnson of Santiago Capital published his update to global G8, Swiss, and Chinese fiat currency issuances versus their official gold reserves. I took the time to go back and pull up one of his early 2018 updates to get a sense of the crazy fiat currency expansionism that's gone on globally in just the last less than 4 years covered here. We're going to use this data set to take a world tour in getting a sense of just how undervalued the major economies of the world's official gold reserves are currently compared to their massively expanded fiat currency bases of late. We'll begin with the two largest outliers in this data set. First, we start with no official gold reserve owning Canada. We'll put their last 4 years of fiat currency creation into fiat US dollar terms, as well as any of the other nations that we cover here. Our neighbors to the north blew out their fiat M0 pile by a 4.5 multiple over the last 4 years. Again, this is the lone G8 nation that owns no official gold reserves. Moving onward now to the most staunch official gold reserve stacker on the list officially, the Russian Federation currently has over 73 million ounces of gold bullion in reserves. The nation is also on the cusp of becoming the world's largest gold producer this decade. It's been relatively conservative in our fiat currency expansionism since the pandemic hit, only requiring a fiat US dollar gold price of $2,295 per ounce to theoretically back its fiat M0 ruble pile fully by its official gold reserves at the moment. No one in this current list even comes close to that level. Moving on now to China, a nation that's widely believed to be underreporting her official gold reserves by a factor of about tenfold. A nation that has a closed capital account, and even if it were to publish massive gold reserves, the sheer size of its fiat M2 supply growth calls for much higher yuan gold prices to come. Up next, the largest collective gold reserve holding bloc of the bunch, the collective European Union, which has blown out their fiat M0 euro pile, nearly doubling it in the last near 4 years of time. And you can see here how far away they've already moved from the old 2011 gold price highs. You can expect more of this to come. Moving on to the land of the rising sun, Japan, their fiat M1 pile has grown the most in percentage terms in the last 4 years. You can see a 40-year cup and handle breakout is about to begin here on this gold chart. Switzerland has expanded its fiat M0 pile by nearly 50% in the last 4 years. What was the last currency to lose its backing to official gold reserves? We see a similar cup and handle formation on their long-term gold price chart. And second to last, we have the United Kingdom, which was the world's dominant reserve currency prior to the fiat US dollar taking over that reign after the Great Depression and World War II. They have blown out their fiat M2 pile by nearly 50% over the last 4 years. And finally, we finished this chart and data run with the USA, who blew out its fiat M1 pile by adding savings accounts and money market funds basically ruining that aggregate as something that we can look back on. But all we have to do is look at how much both the fiat M0 and fiat M2 pile have ballooned since early 2018. The fiat US dollar gold price is up only about 38% since early 2018 to date, yet the fiat currency expansionism we have just covered has well outpaced any of that, and often by many multiples. Here is the full data set that we used here. You can press pause if you want to study it, or we'll also leave a link in the show notes and comments below so you can find a clearer version to blow up on your screens. Now, Brent has often used the data set. He often finishes the data set by showing how high a fiat US dollar gold price would be required by each nation to officially back their respective M0, M1, and M2 fiat currency issuances outstanding. Of course, it's very highly unlikely that we're going to go from a full fiat currency regime to a fully gold-backed version in the future, or at least in the near future. I took the data set and made a more conservative estimate for 40% coverages of outstanding fiat M0 supplies, leaving outlier Canada out of the calculation. And the calculations came to an average of nearly $8,500 an ounce gold price today required to restore some credibility back to the fiat currency supplies currently outstanding. And that 40% coverage ratio is a historic precedent that we saw in the 1930s hit when gold went from 20 to 35, as well in 1980 in the 70s. In the mid-70s, we had blown beyond the 40% coverage and even were able to go back on a full gold standard in the early 1980s. So this has happened multiple times in financial history, so it's not a stretch to say that this can happen again. The bottom line is this: the major central banks of the world have been rapidly expanding their fiat currency bases at rates never before seen. And it's fiat currency supply expansion that over the long term drives gold values higher. Get yourselves positioned now, not later, to be on the correct side of this coming wealth transfer. That's all for this week. As always, to you out there, take great care of yourselves and those you love. If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content.